Hey everybody, it's Jane Johnston with the Briar Hill Group at Remax Camosun. I'm here with our community talks. I'm with Jen Lowe. She's going to be talking to us about mortgages today. So Jen, welcome.
Thank you.
So actually, congratulations. I know you're close to moving into your own home. You've been living in a rental for how long? 2
Uh,
years?
well, 2.5.
2.5 years. Yeah. So you're building your own home. You're close. When is that going to be done for you?
In about another month. It's been a long haul. Living in my mother-in-law's basement suite. Thank you to my mother-in-law. It's been a bit of a long haul, but definitely the lights at the end of the tunnel and building our own home.
Yeah, and you know what? When you build your own home, there's certain satisfaction, right? That you're getting exactly what you want. Wouldn't you say?
Yes, definitely. Yeah. Yeah. We're very excited.
Awesome. Okay, so I'm just wondering because obviously there's been a lot less business in the mortgage world. I'm just wondering what are lenders now thinking in terms of working with buyers? Are they being more flexible? Have they changed any rules? You know, how is the bank or other lenders perceiving buyers right now?
There's definitely been a lot of expansion of some products with some of the lenders. Two big ones is the ability to one option with one of the main banks, the ability to use child tax credit towards qualifying income, which really helps hugely on someone qualifying.
So
Uh,
what does that mean in terms of amounts of money? What is a typical child tax credit?
Well, it can range from $300 up to $700 or $800 a month, and depending on how old the children are, it does vary by lender how much they'll use of that child tax credit. But being able to use that as qualifying income is a help towards the amount of mortgage that they'll qualify for. So that's huge.
Right, and up to so for every dollar,
Mhm.
you can spend $4 more, I would say minimum, right?
Yeah, yeah, yeah. Um, the other one is car allowance.
Oh
Uh,
yeah.
so quite often, if clients, people that are self-employed, their company pays, or they either get reimbursed for their car, or their company um, pays their monthly car payment. Um, Being able to take that out of the equation if it's on your personal credit bureau is always requiring an exception from a lender. It's not a given. And we just got an update from Scotiabank that that's okay. They'll if we can prove that the company pays it, or that the on their pay stub they get reimbursed for their monthly car payment, then
Yep.
they'll use it. So again, a huge bonus, like just a bit more innovation in here. We want to lighten up the qualification guidelines to help get more people into mortgages and purchasing homes, which is great.
So they're really looking at cash flow, right?
Yes.
Right, because it's the cash flow, the cash coming in and going out. So if you have supplementary income through child tax payment or car payments from your company, then they will credit that or look at that depending on the lender. That's what you're saying, right?
Yes. Basically, to sum it up, going back to like 2012, all we've been hearing is lenders are no longer accepting this. Oh, we'll no longer accept this. We can't use that. We can only use 50% of this. And it's been tightening, tightening, tightening. And then the stress test came in, where people have to qualify, of course, at a rate 2% or more. 5.04 is the current qualifying rate. When our forecast, especially after COVID-19, that we're what we're currently dealing with, rates aren't going up anytime soon. Like there's just no way. So why are people having to qualify at this much higher rate? It makes no sense.
I think it has to do with the fact that they're just concerned that in the future people will potentially um, eventually have more of a mortgage to pay, and they're just trying to build in a buffer. Do you agree with that?
Yes, that was the reason for the stress test being put in, because there was the outlook was that rates were supposed to increase and increase quite a bit. So
Right.
it was put in place that, in 5 years' time, to make sure if rates increase over 2%, clients are still going to be in a position that they're going to be able to afford their mortgage.
Right.
Assuming in the next 5 years they never get a job raise, or that nothing else changes. So it is there the need for that stress test in our current environment? I think having some kind of a stress test there is smart and important to make sure, like you say, that people will be able to afford their mortgage if interest rates do increase.
Do you think that we're going to be seeing a change in the stress test rules?
Yes, that is definitely an outlook in the near future, that there's could be some lightning. Um, what's the word I'm looking for? Some
What do you mean? Tell me.
some lightning, or like
Oh, it's going to lessen.
lesson. Yes. Oh, yeah.
I thought you meant like bang, lightning.
No. Yeah, boom. That would be wonderful. It'd be lightning for me. It'd be like, yes.
So it's going to be easier to get a loan because they're probably going to decrease the gap for the stress test, so you won't have to qualify for such a high amount anymore, right?
Right.
Because what's the interest rate now? The bank rate, I mean?
The qualifying rate is 5.04. So previous to COVID, there was a change that was expected to go into place April 6th. And how they were going to do the stress test was going to be on a weekly average of the 5-year posted rate, I believe, of the top 6 banks. So just prior to April 6th, when we were watching, I guess it was a few weeks prior to that, I was kind of looking, okay, well, what could this number be? And the expectation, or the thought of the qualifying rate, was going to be around 4.79 to 4.89, given rates at that point in time. So that's a little bit lower than the 5.04, right?
Mm-hmm.
It would make a difference in qualifying of $50 a month.
Is that a lot? Like for, I always tell people you don't want to borrow so that you're on your tippy toes and you're going to be stretched, because then you're always on edge. Do you try and get people to borrow? Like I used to work with a mortgage broker, I used to take people right to the edge, and to me, it's just so stressful. Like,
Yeah.
you really want to make sure that they're comfortable, so that if something happens or things happen, you can still own your home. Like you have a couple of months of mortgage payments or whatever till you find something new, right?
Budgeting is huge, because the one thing that people don't necessarily realize is that what we're using to qualify based on the stress test rate is their gross income. So
Uh,
tax income, now we can only go up to 39% of that pre-tax income. But if you consider a young family, or married couple, no kids yet, no daycare costs, no, or throw a car payment in there. It's amazing how quickly your
yeah.
after-tax income is eaten up.
Well, interestingly, I found my tax forms from 2005, before I became a realtor, and my income was $18,000, and my daycare was 15 for 2 kids. So, that's when I decided it wasn't worth being a teacher at the time. I couldn't afford to be a teacher, you know?
Yeah.
Anyway, so, like, some things, change over time. I guess the expectation is too with income over time is that it increases as people move into areas of seniority. We're not gonna have somebody, obviously I was working part-time, trying to stave off the cost of, uh of being at home with my kids, but anyway. Okay, so let's get back to the story here. Are there any specials, cashbacks, things happening with banks then that incentivize buyers right now?
There's definitely a few cashback options. There, one lender, RMG, is offering a peace of mind mortgage option. Um, you can get up to 3% cash back, and the rate is dependent on how much you get cash back. The kind of the sweet spot is a 1.5% cash back with a rate of 2.84%, and that's over a 5-year term.
So
Uh,
what does that cashback mean? When do you get that?
you get it at closing. And so, like, based on a 500,000 mortgage, you got $7,500 in your pocket.
Wow.
Yeah,
So that could pay for your part of your property transfer tax or
yeah.
yeah.
If you even just want to look at your current mortgage and you want to switch it from one lender to another to get a lower rate right now, you can do that. Get a lower rate, save money on your monthly payment, and get cash in your pocket. And with the switch transfer program, there's no costs to take your mortgage from one lender to another. Now, there would be a penalty on your current mortgage in getting out of that,
Right.
and that can be put into the
Calculation.
yeah, yeah,
So then you would check whether or not you have an open or closed mortgage
yeah,
or fixed and variable rate because that will be dependent. That will determine what your penalty is, correct?
yeah, yeah. The biggest thing with this particular lender's cashback program that I like is that if so, are where are we going to be in 5 years, right? Will you in 3.8 years, as that's the average, want to move and get out of your current mortgage? In 3.8 years, are you going to remember that you took a cashback mortgage and got $7,500 cash, right? And do you want a surprise of you've sold your house, you've bought another house, and you get the discharge statement or the payout amount of your existing mortgage, and oh, you have to pay that whole amount back? That would not be a pleasant surprise. What I like about this lender is that the um, cash back that you receive, the payout amount over time decreases. So it's prorated over the term.
So it's not a gift.
It's not a gift. No, it's definitely not a gift. But
Darn.
it's also, you don't have to pay the full amount back. It depends on when in the term you would want to get out of.
So what they're doing, what I'm hearing, is they're trying to incentivize people to move from another product to their product, and they're trying to lessen the pain a bit by giving you money up front.
Yes. But not making you necessarily, you don't have to pay the whole amount back if you got out early. And I guess why I'm emphasizing that is that we had clients together that we were looking at their closing date, and for the sale of their current home, it was going to be 1 day difference from their mortgage renewal date. And
Yeah.
CIBC was going to charge them the full amount of their cashback they were going to have to pay for 1 day. So that's pretty crappy. So luckily we were able to change the date and everything was good, but that would have been a pretty ugly surprise, right?
I think it was $11,000.
Yeah, right?
And you know what? So it just speaks to saying when you're writing an offer that a lot of people just focus on the price. but you have to remember the seller's dates are very important. So if you can meet the seller's dates, you can save the seller a lot of money, right?
Yes. Oh, yeah. It was a huge do you remember that one?
I do remember that one.
That's not gonna work because I knew, they were gonna be charged that full cashback amount. So I guess that's and I hope I'm explaining it okay. To me, that's something that I think is a good fine print piece on this particular lender that they don't do that. Um, that
So let's just talk actually about COVID-19 because it's interesting. So I recently had a buyer or a seller who became a buyer.
mhm,
And because of COVID-19, the buyer of her property had to close quickly, but they were in a rental, and my client was in did not have possession of their new place. So we actually completed on their place early. The money went into trust, was held there for a month, and then we used that money to purchase the next house. And she completed early to purchase the next house by 2 or 3 days as well. So that which happens a lot more in other provinces than it does in BC,
yeah,
correct?
yes, yep, yeah. I think it's just how our title process works.
Yeah, we follow a Torrens process, and everything is very upfront. And so, like, if you say you have an offer on your property, I would say 99.9% it's solid, right?
Yes. Well, yeah, definitely. One big change actually with COVID-19, TD Canada Trust, as one particular lender has stopped their non-resident program.
What's that mean?
So they've pulled out. They're saying we're not taking any more applications. And this is through the broker channel. I'm not sure about the branch if it would be different, but for people wanting to purchase that are
Yeah,
currently outside of the country, that live outside the country and they're wanting to buy a second home in Canada. They could be a Canadian citizen, but living and working in the US, for example.
yeah.
Um, they TD is saying they're not interested in those applications right now, which makes sense because how are they going to get here to sign the documents?
Well, and also just what is they're a bad risk
Yeah,
health-wise.
yeah, yeah.
Yeah, that's very calculating,
Hmm.
I find. So
Hmm.
any other special transactions or information? Danielle is saying, such great information, and Linda Mackey's on. So hi, Linda.
Oh, nice. Today there was an announcement, of course, about the unemployment rates across Canada and how sad those numbers were about what we've been going through with our current situation. Um, from an economy standpoint, or through Dominion Lending, Dr. Sherry Cooper is our chief economist, and I love listening to her. She's got such a great outlook, or um, in helping us understand how the impacts of the economy and the mortgage world and oil, on and on and on. She is letting us know, or in her update today, she's suggesting that there is a substantial pent up demand.
Yes.
And again, just reiterating that rates are not going anywhere. She's suggesting 2022 before we see any rate increases.
I tell you, it's an awesome time to own a house. Like, I remember in the 80s when it was 22% or 18%. And one of my coworkers, I worked as an office manager, and every single paycheck went to finance her car. Mine financed my bicycle. So, okay, any other changes?
Changes, no, but definitely on the horizon. She was also pushing for that the qualifying rate, that stress test rate, really does need to come down. It hasn't come down enough.
Well,
Um,
if we're seeing 2 years where the interest rates are gonna remain the same, at least I'm not seeing that, the need for the stress test, that's adding 3%. It's a lot of money.
yeah, exactly.
Huh.
So
So
yeah,
we want to stimulate the housing economy again, I guess, too.
yeah.
Very interesting. So, okay, let me ask you a question about your own business, because we have gone totally virtual. Any time that we can do anything for a client virtually, like show them a house or attend a building inspection, it's all going to be virtual. Just wondering, how has your business changed with COVID-19 now? We're 2 months in.
Well, I mean, the word of Zoom is something I never even heard of prior to COVID-19, and now it's a regular everyday occurrence, right? I mean, I'm having Zoom meetings with my clients. I'm watching webinars, economy updates. It's actually been amazing from an education standpoint. The our owner of our company, Gary Morris, has been getting all kinds of speakers in. So it's definitely ramped my business up that way. Um, I'm very thankful that I guess I'm one of those people. I embrace change. I'm interested in learning new programs, products. Um, so in
And technology.
and technology, I find it interesting to try and figure out. So I did taken on this new mortgage application program. It's called Velocity, and I'm extremely relieved that I did when I did. Um,
Without the pressure.
yeah, um, it's taken a lot of time because there's parts of the program that I'm still not using and utilizing. There's the ability for clients to sign electronically, which is wonderful. There's the ability for clients to upload their documents just by taking a picture on their phone, and it turns it into a PDF. So it makes my job easier, and hopefully it's easier for the client instead of trying to find that document that I'm asking for, and then to just be able to take a picture of it, and
Yeah.
that's perfect. So
Actually, you know what? I just want to say one tip that I tell people who I work with who aren't ready to buy a house right now is just start a Dropbox folder, put your notice of assessment in there every year, put your a pay stub in there every month, put your mortgage statement of any loans that you have in there right now, just so that you, when you apply, it's all there. Honestly, just share the link, and your mortgage broker will love you for it, right?
100%. Yes, yes, very much so. And the one thing that I am going to do in my once I get into my new house is look for some new lighting and my new office space.
I can help you with that.
I will be reaching out for some help. Yes, because I could definitely use some assistance with that. But definitely being able to do things virtually, I feel very blessed that we're able to do that still in our business, and I've been able to keep my doors open virtually for sure.
Yes, well, thank you for helping me with my clients. I know they really appreciate it. You totally get in touch with them right away, and we have great communication, so it's awesome working with you.
I love working with you too.
And, I just wanna say I noticed today, do you know what that means?
No.
It means community, and that's what this is all about,
Yes.
this picture. It's all about being together. There's a reason why the picture is a circle, because what goes around comes around. and you need great people on your team. So if you're looking for a mortgage broker, actually, you should contact Jen, and she can help you find a place. Very, as you can see, very easy to talk to and answers your questions, knows what's going on in the market. So one more question for you. What are you doing for Mother's Day?
I think we're going to be, well, what are we doing? I want to go for a family walk, drag my kids out for a nature walk.
Awesome.
Water in the background. See, our tiny little sweet. Yeah.
It's okay. Anyway, okay, well, have an awesome Mother's Day. Know that I'm thinking of you and all the other mothers out there, and enjoy. It's supposed to be a great weekend. Enjoy the outdoors and the fresh air. We'll see you on Monday at 4:30. If you want to be a guest, please message me. And don't forget to go to my YouTube channel. We're looking to get over 1,000 likes so that we can get some benefits out to you guys as listeners. Okay.
Thanks, Jane.
Okay, take care. Bye-bye.